The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. EG Tax.
It's Ask the Tax Lady with Esther Gulius and EG Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hey everybody, this is the Tax Lady, and we got an hour to talk taxes, and let's face it, tax time is really only 37 days away, and we're going to make you really smart so that you don't overpay your taxes, and that's what we're all about. I'm Esther Gulius from EG Tax, and I'm joined in studio with Tiffany Fabian. Hey, Tiff.
Hey there, Esther. Happy Saturday. The snow is melting, and people are hitting the roads and shopping, which is great to see.
Did you do any shopping, Tiff?
Online, I did some shopping. Well, I got to say that I'm not the world's greatest online shopper, but my daughter did some shopping, and I gave her my credit card. How about that?
No, that qualifies. Hey, Chris, and Chris Fabian. Hey, Chris, how are you doing?
Hello, Esther.
Now, did you do shopping, Chris?
Did I do shopping? Not yet. It's not the 24th yet. Well, it is November 24th.
Well,
it's not December 24th.
Right. I was going to say, because many men shop on the 24th, and some of the very best deals are on the 24th.
Yep. Because they have
Want to get rid of everything.
Okay, so
And wait.
Yes.
And tomorrow, the 25th, happy birthday.
Thank you very much. I made it through another year. Thank you, Jesus.
Amen.
So, all right, I want to make sure everybody knows we changed our corporate headquarters from Niagara Falls Boulevard over to 1890 Colvin Boulevard, and you'll be thrilled to know you won't have snow piles to jump over because we got a great big parking lot, so that's a wonderful thing. So the Niagara Falls Boulevard office will be open with some phenomenal staff members, but we won't be there. We'll be over at 1890 Colvin Boulevard in Tonawanda, right?
Yep. Very excited. There's more room.
And I just want to also congratulate the Sabres. I am so thrilled. I'm so used to when I want to see where they are, I usually look at the bottom.
Yeah,
because-
Frank in the
and,
control
oh my
room
gosh,
is
I
like
can't believe
sometimes
it.
he's cheers and he hips and he hollers, right, Frank? What do you think?
I love it so far.
I mean, I just can't. I know it's a long season, lots of games, but boy, oh boy, oh boy. I'm Esther Gulius, the Tax Lady from EG Tax, and I'll tell you what we're going to talk about today. And with 37 days left in the rest of the year, we want to make sure that you can minimize your taxes that are going to be due. And since this year, the federal has one set of rules, and the state of New York, which you probably thought always had another set of rules, they did, but they were pretty much married, the federal and the state, except for some exceptions, like making your pension up to the first $20,000 tax-free in the state of New York. They had some oddities like that, and maybe some credits on the state that were different, but pretty much the state paralleled the federal. Well, now you got the federal with all their new stuff, and the state who says, well, we're just going to do it the old-fashioned way, the way it used to be. So maybe you can't itemize on the federal, but maybe you can on New York State. So we wanted to make sure we talked about that. And our phone number here in studio is 803-0930. 803-0930, star 930 on a cell phone. And before we get to our calls, we already got calls lined up. What you want to make sure is pay up all your deductible expenses in 2018 if you're somebody that can itemize. And realize you may not be able to itemize on the federal because the standard deduction is fairly high, but on the state of New York, they're going to let you itemize even if you can't itemize on the federal, if it's over the New York State standard deduction. So because the New York State standard deduction is $16,050, and the federal is $24,000, you'll be able to get that advantage. And a lot of things aren't deductible on the federal, even if you could itemize, but on New York State it is. So I wanted to talk about that. But why don't we first go to the calls, okay, you guys?
Yep.
And then we'll deal with them, and then we'll go into that. And again, if you have any questions, 803-0930, 803-0930, star 930 on a cell phone. And we got Tony, Anthony on line one. Hey, Anthony, how can we help you, sir?
Well, I have two highly related questions. One is, I had to do a deduction for my IRA. It was quite a hefty deduction.
Do you mean a withdrawal?
Withdrawal,
Okay, I gotcha.
RMD, I think it's called.
Okay.
And I was told that I wouldn't be taxed on that.
Is it a Roth that you took the money out of?
Absolutely. Well,
Okay.
no, it's not a Roth. It's a regular IRA.
Okay. And so, how old are you, Tony?
72.
Okay. So, first of all, you're not going to have a penalty. Secondly, how much did you take out of your RMD?
Well, I made the required amount.
How much
The
was that?
required amount that I had to make this year.
How much was it?
That was $9,000.
Okay. And are you single or married?
Single.
Do you have any other source of income besides your Social Security?
Yes, I have, stocks, bonds.
Okay, so how much would you think your investment in? I don't mean to be nosy. I'm trying to help you here. How much do you think your other investment income would
Earns
be?
a year.
Well, I'm looking at my Social Security statement here.
No, your other income, not Social Security, not Social
Your
Security.
stocks
what do you
and
think your
bonds.
investments make?
How much do they make?
Yeah, like what do
year.
you think your dividends and interest would be?
I don't know, 25,000.
25,000?
So
Okay.
he's gonna.
And does your wife work?
No, I'm single.
Okay, so give him the good news.
Well, the good news is there isn't any good news. You're going to pay tax on
I
that
know.
IRA distribution
No. If he only makes 25,
I was like,
out of his investments
25,000 plus 9.
is 34,000. His
Yeah.
standard deduction is 13,500.
No, he's 24,000. He's married joint.
No,
No,
he said he's single.
Oh, you're single?
I'm single and I gave everything.
Oh, okay. Then you are going to pay taxes.
Yeah.
Yep. So, but it's not going to be a large amount. You're probably going to end up owing about $800 in taxes.
Okay, what they had told me was that I wouldn't have to be taxed at all on that if I
Well,
gave.
that's not true.
Wait.
Did
What
you give it?
Did you give it directly to a charity from the IRA?
Yes, I gave.
Oh, that's good. You did
IRA,
absolutely perfect.
30.
If you do a direct rollover from your IRA to a charity, then that is going to be completely tax-free.
Hey, now here's the kind of the related question. As far as Social Security, they told me they'd have to count that money as toward my Magi.
No.
PI, according that would actually raise the amount of money going to Part B.
Okay, so they may count that as part of the money in computing your Part B Social Security
Yes.
Medicare portion, but it's not going to cost you any income taxes because you did the direct rollover.
Okay, then the last part of it is my Magi is 92,000, and they're going to pay me. Let's see. They put me in category 1 and 2, 85 to 107, and 107 to 133.
So you're going to pay more.
You're going to
in
pay about
Medicaid.
$40 more a month for Medicare.
Right.
But that
But I mean, if you
RMD
think
is not
about
going
it,
to
though,
affect
when
it.
you did that RMD rollover, that was so smart.
Yeah,
That was so
really
smart because not only would you had to pay you're going to pay $480 extra in your Part B, but you would have also paid income taxes. Now you don't have to pay taxes, so that was really smart.
The only thing I'm wondering is why am I, according to this statement they send me, if you make between 107 and 133, they should only take 135 out of Part B.
I think he should call us at the office during
Right.
the
You know
week.
what we want to do is we want to make sure we give you the best information, Anthony. So why don't you call us at 632-7886, give us all the particulars,
No
or you can come in
charge.
for a free consultation, and we'll show you everything. But basically, you pulled a rabbit out of the hat by doing the direct rollover from your IRA to a charity, which is part of what I was going to talk about today for those people that have to do their RMDs. That is great. So if you're somebody that's a giver like you are, you really save yourself some money. Unfortunately, if Medicare is counting that total available income towards what you have to pay for your Part B, that's like small potatoes compared to what you would have had to pay had you not done the rollover. So kudos to you, but call us at the office and we'll talk further, okay?
63288.
No, 632-7886.
7886. Thank you very much.
All right, thank you, sir.
Thanks.
All right, I'm Esther Golias, the tax lady from EG Tax. We got 37 days till the end, and then we know what's going to happen. The biggest tax law changes ever in history come into effect, and not only are there the biggest tax law changes in the history on the federal, but the state of New York says, oh, no, we're going to keep the old law. So you got old and new, and we want to make sure that you know what's happening. So we're going to talk about that when we get back from the break. 8030930, 8030930, star 930 on a cell phone. We'll be back on the other side. All right, I'm Esther Golias, the tax lady from EG Tax. We got 37 days until, you got to put up the tree, you got to do all that Christmas shopping, and you want to make sure that you don't overpay your taxes. So you got to listen to Ask the Tax Lady. We will keep you up to date so you know what's happening. And the big thing that's happening is, of course, with the largest tax changes in history, I think just about in history, taking place January the 1st, and the state of New York saying, oh no, we got our own ballywig of deductions. And so you want to make sure that you maximize your deductions on the federal and on the state, but they have two different sets of rules. So 8030930, 8030930, star 930 on your cell phone. I know we have callers holding, but let me say quickly, even if it's not deductible on the federal, it could be deductible on New York State, and your federal and state are going to be the same for medical, 7.5% of your adjusted gross income, right?
Correct.
Okay. Taxes, state income taxes, real estate taxes, foreign taxes paid, sales taxes on the federal are capped at $10,000.
Right.
Correct, on the federal. But on New York State, they say go for it.
That's right. And New York
Except
State
you can't,
was,
but you can include your state income taxes.
and New
correct?
York State was pretty forward. In all the states, they were one of the first ones to break away from the federal. So
Right.
kudos
So
to New
they kind
York.
of got a divorce. So
Yep.
New York State taxes are not limited to 10,000.
Right.
Correct?
Which is
Yep.
great. The sky's the limit. And that's
Right.
really good because us New Yorkers certainly pay a lot in
I
taxes.
think that this was their way of making a mea culpa, right? For the because it's high tax state. All right, mortgage interest and home equity on the federal is only deductible for acquisition and remodeling indebtedness. Yes?
Correct.
All right. On the state, they say go for it.
Yep.
Right?
Different
so it's
rules.
a home equity credit line, even if it isn't for mortgage acquisition or indebtedness, it's still deductible.
That's
Right, right.
So
And
when you're doing your return, you have to think, oh, is this for acquisition? Okay, I can put it on the federal. Is this just home equity? Oh, I can put it on the state, right?
yep. And the federal has brought down your mortgage limit to 7. I know this is going to sound like a
Yeah,
lot of money
Western
to
New
a lot
York,
of people,
yeah.
but there's still a lot of homes in Clarence, Williamsville area, Alma, any 750,000 cap of mortgage interest.
Right.
Whereas
so
New York
if
is a
on
million.
your, let's say you said I wanted to pay off my kids' student loans, and you had taken out a home equity credit line tied to your home on the federal, that wouldn't be deductible anymore, correct?
Correct.
But on the state, it would be deductible.
That's right.
So again, can you see like you're doing two sets of books here? One for like Charlie the Butcher and one for whatever.
It almost sounds like two sets of books for truck drivers.
That's exactly right. All right, then charity. All right, on the federal, it's okay. Whatever you do, it's going to be deductible. Now, I want to make sure, just like that guy, our first caller, that Anthony, who had done the RMD rollover, he is so smart. And I want to tell you, if you got to do an RMD, required minimum distribution, because you're over the age of 70 and a half and you got an IRA, you can skin the cat 100% by taking that RMD and rolling it over to the charity of your choice. Now, obviously, if the charity of your choice is you, then that doesn't qualify.
apply.
But let's say that you're somebody that likes to give $6,000 every year to St. Stanislaus, right? You can do the direct rollover from your RMD to the charity, and it means it's completely tax-free on the federal and New York State,
Yep.
right? Other things for charity, clean out your closets, volunteer mileage, still deductible federal and state.
Yep.
Okay, casualty losses. Casualty losses on the federal has to be a federally declared disaster area,
Yep. We got 4 calls holding.
right?
Yep.
I know. The state of New York, Old law, so it's whatever casualty loss that you had would still be a casualty loss, even though it's not federally declared disaster area, but it's going to be limited by 10% of your adjusted gross income plus $100,
Correct.
right?
Yes.
Okay. Okay, then we're going to go to miscellaneous itemized deductions. Which will take a lot longer. So why don't we go to line 2 and talk to Dave? Hey, Dave.
Fran.
I'm Esther Golias, a tax lady from EG Tax. What can I help you with?
Hi, sir. I was just wondering. I've got a grandson who turned 19 this year that lives with me, and he's hasn't worked. He's disabled mentally, and he's been kind of in and out of hospitals. Can I'm his support. Lives under my roof for the last 12 months. Can I claim him next year as a dependent?
All right, may I ask, are you working, Dave?
I'm working right now. Yeah, just part time.
What do you think are you married?
Oh yes.
What do you think you and your wife have as far as total income, including wages?
I'm going to say maybe $40,000.
Okay, but some of that's Social Security, right?
Right. Yeah.
How much of it?
Whatever I withdraw out of my 401 account.
What do you think of that 40 is pension and Social Security?
I'm going to say probably 30.
All right, so most of it. So around 8,000 is your wages?
Yeah.
Okay, so Tiff and Chris, make David happy.
Yeah. It sounds like you get to claim your grandson. You provided more than 50% of his support. He's a U.S. citizen. He lived in your home for more than 6 months.
He's disabled.
And so if you have wages, you get to claim him, and then you get the earned income credit for the federal and the state, which is really exciting. And
So it's a lot of money to you,
it's a
Dave.
lot of money. So the answer is yes. And if he's lived with you in 2017, you should amend your return and claim him.
Yeah. So I can claim them.
You can
Yes.
claim them, and don't forget the earned income credit. Like, they got money sitting in the bank for you, and in your situation, it might be around $2,000. So,
Actually, it was a lot more than that last year. I was just
okay, all right, so that's great. So you know what it is.
Yeah.
So but the important thing is you do qualify.
Yep, absolutely.
Okay. Very much.
All right, thanks for the call, Dave.
Thanks for being a good grandpa.
All right, yep, that's right.
And, one thing, and I always hate to be a Debbie Downer, one thing we didn't ask him was how's his grandson's health insurance? Because if that's through Medicaid, then he may want to qualify, may claim his grandson, because then they may have to start paying $500 a month for health insurance for him if
Well,
they claim him.
And that
So
is
that's
true, but next year, that won't be the case, right? In 2019.
Right.
Because the whole
That law is gone.
penalty.
No, I'm not. I'm talking about he won't qualify for Medicare or Medicaid anymore because
because he's claimed.
he's
on his
claimed
grandpa's
right.
return.
Yep.
That's true.
You
Good
just
point,
have to
Chris.
get
Good
all
point.
the pictures.
Okay, let's go to, we got Steve, right?
Yep.
Steve hung up.
No, we got
Kathy.
we got Steve.
It was
We
line
do have
2
Steve.
that my fault.
Hey, Steve. I'm Esther Golias. How can we help you?
Okay. Last week you guys were talking about beneficiaries for your 401s.
Right. Which is really, really important.
I was really kind of confused with that, okay?
Okay.
Right now I got it set up so the beneficiary of my 401 is my estate. And it sounded like that if I did it that way, it's going to cost more money in taxes after I'm gone.
All right, Chris, explain it.
That is unfortunately true, because for an estate, which is a tax return form 1041, after $12,500, you're at the maximum tax rate, which is 37%. Where
Of course, you're not going to be here to suffer that, but your estate would. But if you name people as your beneficiaries, if you have specific people, then they get this benefit. They have a choice of 3 ways to take the money, right, Chris?
Yep. They have 3 choices. They can take it all up front and put it on their tax return.
Over 5 years, they can amortize it, or they could take it, amortize it over their life expectancy.
Their life expectancy. So they can either take it all, take it over 5 years, or amortize it over the life expectancy. So it ends up being far less taxed if you name specific beneficiaries. So what I'd suggest you do is go in, if you have somebody that you want to leave the money to, I would take your estate out of it and I would list specific beneficiaries so that they have the option of those three choices.
But my this is a deferred comp. Is a substantial part of my estate, and I want.
I know, but
to divide it up.
but upon your death, if you have a beneficiary, it then goes. You're not going to pay any estate taxes anyway, unless your estate's over $11 million. Is it over $11 million?
Hardly.
Okay, so you're not going to pay estate taxes anyway. But if those heirs that are inheriting it, you want them not to get shafted, you should list them on your as beneficiaries.
And you can list as many beneficiaries as each. This person will say Bob gets 10%, Kathy gets 10%, Joe gets 10%, Billy gets 5%. You can break it down like that.
Okay.
And it really is in their best interest.
Yeah, there's nothing more heartbreaking when I do somebody's return and they didn't leave a person as a beneficiary and the amount of taxes that the estate pays.
Right, because $100,000, we'll just say it's $100,000. The estate tax, the 1041, not the 706, the 1041 would pay $37,000 to the federal, not counting New York State.
But if beneficiaries were on there, they might pay no taxes depending upon their standard deduction and their filing status. So,
Okay. I have one other quick question.
We're going to have to break for news. You want
Hold on, Steve.
I'm Esther Gillies, the tax lady. See you on the other side.
Frankie.
Hey, I'm Esther Gillies, the tax lady from EG Tax. We got a half hour to talk about taxes and 37 days till January the 1st when the jig is up. So we want to make sure that we get you to know what the heck is going on so that you don't overpay. So, okay, why don't we go back to Steve, who was in a conundrum about his beneficiaries. Hey, Steve, what's the next? What's the continuation?
Okay. What I don't have a 401, but I have a 457.
Yeah, same difference.
And what I understand is I'm not able to make a donation to a charity out of a 457.
That's correct. It has to be through an IRA. In order to do that RMD rollover, it's got to be out of an IRA.
Good that you knew that.
But that's a good point. But so for those people that have IRAs who have to do an RMD, it's got to be. That's where you can do the rollover to a charity. Otherwise, if it's out of a 401k or 453, you can't.
Is there any inexpensive way to take it out of the deferred comp?
You could roll it over to an IRA and then do it.
See that Chris is so smart.
Ready to do that?
You can take what you want to do is out of your deferred comp, you could roll half of it over, whatever you want, to an IRA. And then do your minimum distribution from the IRA directly to the charity.
Right, if that's what you want to do. Remember, this is no great shakes if you don't want to give to a charity. But if you're somebody who does give to a charity, you can't do it through the IRA, through the 401k or the other pension plans that work. But if you take those pension plans and roll it over into an IRA first, then they become viable options for you.
Thank you.
All right. Hey, thanks for waiting.
And
yes, sir.
Sorry. Tim, our healthcare expert, has chimed in. He listens to the radio show all the time, and he heard the previous caller. He said the RMD for charity does not count to Irma and Magi.
Oh, good. So that other guy didn't have a big problem.
Nope, not at all.
Oh, that's great. That's great. And, that's the trouble. Sometimes the information that you get from your friends or even some of the professionals is not good. And so it's always good to have somebody else that you run it by. And one of the great things that we offer, EG Tax has a division called EG Health Connect. Mm-hmm. And Tim Eliason is our president and director of EG Health Connect, and he will give you the best information. And the fee is outstanding. It's free. You can't beat that.
Not at all.
So if you have any questions about your health insurance, about if you're moving,
and right now is open enrollment too.
Open enrollment.
Yep.
So if you're moving from regular insurance and you're now 65 and you're looking at Medicare, you want to make sure you call EG Health Connect, and that's at our corporate headquarters, 632-7886, right? All right, let's go to Kathy, who's been waiting a long time. Hey, Kath, how can we help you?
Okay. My husband turned 70 on July 27th.
Okay.
When does he have to apply for the RMD?
Okay, so it's in the year that he turned 70 and a half. So July, August, September, October, November, December.
January.
That would mean that January of 2019 would be when he's 70 and a half. So he has to either take out his RMD sometime in 2019,
Or wait till
or
April
if he
1st.
wants, he can push it off until April the 1st of 2020
We'll have
to
to
take
take
his first RMD and then take another one before December the 31st of that year in 2020.
All right. April of 2000,
April 1st. It would be if he pushes it off.
2020.
He's got
So
options.
He'd take so he'd have a double hit in 2020, but nothing in 2019.
So if you have a lot of income coming in for 2019, you may want to wait to do the double in 2020.
Okay, we can wait until April 1st of
Right, to take the first one then again before December 31st that same year.
and do two of them.
Right. And the other thing is many people, when they see how much their standard deduction, they're losing their personal exemption, but how much their standard deduction is going up this year, they may find out that they can take more money out than what the
Good point.
required minimum distribution
And
is
you're allowed to
tax-free.
do that.
Right? And you are allowed to do that, correct.
Got to take out?
You take the amount and you divide it by about 29. So however much is in there, you divide it by about 29,
I think
Kathy.
it's 27 and a half, really. It's
28,
close, but
yeah.
close, you know.
28, 29.
All right,
28, say 28.
Yeah, 28.
Okay.
So if he has 280,000, he has to take out 10,000.
Okay. All right.
Okay? But if you want something specific, and anybody listening, if you want something specific, you can call us at the office, 632-7886. We're happy to help you. There's no charge, no strings attached. We don't make you come to see us. We just really want to help.
Okay.
Or you can email us through our website at egtax.com.
Oh, thank you so much.
Okay, dear?
Yep.
Good question.
All right, thank you very much. I'm Esther Golias, the tax lady from EG Tax, 8030930, 8030930, star 930 on your cell phone. I know we got callers waiting, but I wanted to get into this. Remember, miscellaneous itemized deductions on the federal are now dead. May they rest in peace.
Which is just
However, on the
shameful.
state of New York, they're alive and well. So, if you have employee business expenses, not self-employment, but employee business expenses. You're an employee and the employer makes you do such and such. You got to buy your own widgets or your own pens or pencils. That's not deductible on the federal, but it is deductible on the state. Brokerage fees, legal tax prep is deductible as a miscellaneous itemized deduction, New York State only. Education, lifetime learning would be the credit you take on the federal, but if it qualifies as a continuing education, it's a deduction on New York State because you wouldn't get the credit you can't get a credit on New York State. Office and home, deductible on New York State only unless you're self-employed. If you're an employee, you can take office and home. Job hunt, New York State only. Moving expenses deductible if you're moving into New York State, only deductible on New York State unless, and deductible on the federal unless you're a military person.
Correct.
Licenses, only deductible on New York State unless you're self-employed. Union dues, New York only. Hobby expenses, New York only. Loss on a Roth is not deductible anymore as a miscellaneous itemized deduction on the federal, New York only. Investment expenses, deductible, New York State only. And these would be, and there's a lot more. It really has anything to do with making money, employee business expenses, things of that nature, are limited
Hobby.
to 2% of your adjusted gross income, all right?
Right.
Now, what isn't limited is gambling losses up to your income on the federal and, of course, on New York State. Losses from Ponzi schemes are deductible without a 2% limitation. And unrecovered investments on annuities on the final return of a decedent on the federal and New York State. So I wanted to let you know that just because you can't take it on the federal, you can take it on New York State. So you want to make sure that before you start chucking away all your write-offs, they are deductible, but you actually end up doing two separate types of returns.
That's right. That's right. So you really want to pay attention to that.
All right, let's go to Phyllis. Hey, Phyllis, how are you, my dear? Thanks for waiting.
Hi, thank you for taking my call. I'm 57 and my husband is 60. We own 11 single income properties. We were doing this for retirement. I make $60,000. My husband makes $60,000. Right now, we're going to retire in about 3 years.
Okay.
The question is, we probably want to liquidate because the market has gone up so good.
It is. I'll tell you. You know, make lemon out of them. Well, actually, make hay when the sun is shining, and the sun is shining on Western New York.
And
even though it isn't.
With the tenant situation, we just want to liquidate. So, with that being said, I'm concerned about capital gains. What's your advice? Should we sell a couple each year?
All right, so let me ask you a couple of questions.
Sure.
What do you think if you were to put all of those 11 properties in a bucket? What do you think the total amount would be gross sales?
We owe $400,000.
No, I want to know gross sales, what you think that they would be worth.
We could probably liquidate for $900,000.
Okay. So how long have you had them?
We've only had them for about 4 years.
Really?
Yeah.
Wow, that's remarkable. So you paid how much for them? Around $500,000?
Yeah, $400,000.
You paid $400,000.
So a $500,000 gain.
All right, so you have about $500,000 gain. The thing is, based upon your tax rate, the most you're going to pay is 20%. So if you sell them outright, you're going to pay about $100,000 in taxes on the federal plus New York State. But Chris, Tiff, tell her what she can do to avoid taxes altogether.
She could do an exchange of the property, and so you could do a real estate exchange and exchange one or two of those for
or all of them,
or all of them for other properties of the same caliber, and so maybe in a different area. It doesn't have to be in New York State, and so that's a viable possibility. One advantage is the capital gains will be less because you haven't had them for that long. Chris, what else would you like to add?
Yes. Well, let me think before Chris steps on me here. Let's say that the total tax liability would be $125,000 if you sell them outright. But you might want to invest as a partner in, for instance, I know Family Dollar is looking for investors. So basically, they could invest in something like Family Dollar and then be kind of a very passive investor in something like that and not pay taxes. Go on, Chris. I'm sorry.
Oh, I was going to say, and then there's the new, and I'm going to get the phrase wrong. You can help me, Esther.
Opportunity.
The opportunity zone, where you can do an exchange, but not an exchange to get new rental property in a certain area. And as long as you own that property for 10 years, there's no gain. You pay no tax on the sale.
At all. They forgive the whole thing.
How long do I have once I sell the 11 properties to reinvest and take advantage of that?
You have 180 days.
But you have to do it through, well,
you have 180. If you're doing the opportunity zone or the exchange, it's actually the same. But to identify what you're going to do is 180 days. They give you more time than that. I think it's 2 years before, especially if you're doing the rehab, 2 years to do the rehab.
Right.
Because the way this opportunity zone works, let's say you're in Tonawanda. Every municipality has an opportunity zone. So let's say that you got to get on block A in Tonawanda, and you have to buy a place to rehab. So let's say it's $500,000, just exactly what let's say $1 million, because you're going to get $900,000. So you're paying an extra $100,000, but you take all the money out of your investment, your sales, and put it into that. Then let's say the land is worth $400,000. They don't make you take the land into consideration. You only have to rehab the building part and then the entire gain that you would have if you keep it for 10 years is completely tax-free. So it's remarkable. A lot of people are jumping on that bandwagon. But easier than that would be if she did an exchange. You could take those 11 properties and say, you know what, I want to do a Family Dollar. I'd like to become a partner in this strip plaza. It would require not as much management as you're putting into those 11
talked about the
units.
tenants. Yep, the tenants, and that's really grueling.
But again, if you need help, I know Russ Gullo is our champion. He's a champion regarding the exchanges, and so he is one of our sponsors. He's like, I think he's the only exchanger in the area.
Yeah, and you have to have an exchanger if you're going to go ahead and do this.
So if you want to call us at 632-7886 or call Russ Gullo, you guys don't happen to have his phone number, do you?
I can get it after the break.
Okay, we're going to take a short break, and we'll be back on the other side to help our friend. Hey everybody, this is Esther Golias, the tax lady from EG Tax. Look, don't think you only have to wait till Saturdays to talk to us. You can go to our website at egtax.com. You can call us at 632-7886. We are here to help you. If you're not our client, we don't care. I mean, we want to serve you, but we understand, and we're there to help you. And by the way, if you listen to our commercial, Mr. Gullo is one of our sponsors. Our lady that was waiting, 675-1500 is who she would talk to Russ Gullo. He's a wonderful guy.
And just talk to him about the options, It doesn't mean
that's
you have to
exactly
do it.
right. Okay, let's quickly, the other thing before I get to the other calls is make sure you have time to load up your pension. You can put, it's elected deferrals, you can put up to your wages up to 18.5. If you're under age 50, if you're 50 or older, there's another catch-up provision of 6. So you can put 24.5 away in your pension plan. You got 37 days to do that. 2009 increases to 19,000 with the same catch-up. So it'd be 25,000 next year. Make sure you sell losing stocks to offset income. And if you want to buy back the stock, buy it back in 31 days. It's still a deduction against your other stock portfolio plus $3,000 against other income. Think about opening a health savings account. Defer income to next year if you want. That's another income tax planning strategy. This is a big one. If you're getting a divorce and you're going to pay alimony, do it this year, because next year it's not deductible on the federal, only on New York State. So that would be a very good tip. I mean, especially if you're paying a lot. And make sure if you're over age 70 and a half that you do your RMD. Okay. Now, in my example here, I got an example of somebody that couldn't itemize in the federal, but they can on New York State, and so they had $3,000 in medical, $12,000 in property taxes, $10,000 in interest, $5,000 in miscellaneous deductions. So they have $30,000 in total New York itemized deductions. That would save them $900 in taxes on New York State. So it's not a little thing. You want to make sure that you itemize on the state if you can. Obviously itemize on both if you can, but if you can't itemize on the federal, you want to look at itemizing on New York State.
That's
Correct?
right. Yep.
Okay, let's go to Richard from Lancaster. Hi, Rich.
Hello.
What can we help you with, sir?
I'm wondering if you can help me with, I got a notice from Social Security, and it relates to my Medicare premium.
Okay.
They want to raise it to $433 a month.
So it looks like maybe last year you had a lot of income?
Yeah, and they made a new Maggie, what they call it.
Modified adjusted gross income, right?
It's here in the letter that I made $136,000 non-taxable income, and it's not correct.
Okay, so why don't you call our guy Tim at EG Tax, and he'll help you to coordinate with the federal government. If there's an error, he'll kind of be your lips, so to speak, your mouthpiece, and help you. He's at 632-7886 on Monday, Monday through Friday.
Could I
give 632-7886.
Right. Could I go to the office on Niagara Falls Boulevard?
Well, you know what? We moved over to
Colvin.
To Colvin. We're now on Colvin Boulevard. We're at 1890 Colvin.
And I'm better to go there?
Yeah.
Yep,
Well,
that's where we
we're
are.
at. That's where we're at, so that's where you should go.
Well, I thought maybe you were still open on the book.
No.
Well, the
During
Boulevard's going to
tax
open
season.
up in January again as a tax office, but all of us guys who are on the radio here
So
are on Colvin.
I'll come over on Colvin.
All right, we would love to see you.
And I should see Tim.
Correct.
You should see Tim.
I thank you a whole bunch.
All right, thanks, Rich.
And you know, if there's other people in this boat and it was a one-time thing, like you had an inheritance, maybe you hit a jackpot at the church, you won the lawn fate thing,
Right.
you can fight the increase.
Right.
So
right, because you say this is not
A normal.
typical.
Yep.
This just happened, and I had gambling losses, but they didn't let me take it. And you're looking at my AGI and modifying it for that gambling. So yeah, we'll be very happy to help you. Okay, let's go to Mary. Hey, Mary, how can we help you?
Hi, Esther. I have a question just because I know that you would be the person to know. You know if there is a Social Security income raise this year for senior citizens?
Yeah, there is.
The COLA.
I don't know off the top of my head, but there is. I think it's like $250 or $300 a month. I mean, yeah,
A year.
Not that much a year. A year. But let me see. Are you Googling it?
2.8%.
Okay, there you go. But now we don't know how much Medicare is going to go up. So whether it's going to gobble up the increase or not, I don't know. But it's probably the biggest increase that's been around for a while.
That's what I wondered, because last year they gave a teeny-weeny little raise,
And then they took it back.
Care premium went up, set it. So
That's exactly correct.
okay, so how much is it? I get $1,020 a month Social Security.
It's 2.8%.
2.8. Okay, thank you so
All
very
right, thanks, Mary.
Bye.
All right. I'm Esther Golias, the tax lady from EG Tax. A couple other things I wanted to talk about before the end of the show. If you want counseling, if you think, there's so many things. Like if you're a small business, the 20% pass through, some of you are going to have, you want to make sure that you have wages if you're paying staff and you think you're paying them on a 1099. You want to make sure that you have them on a W-2 if it's, to make sure it's correct, because they're going to be definitely scrutinizing that more than ever. The pass-through, you want to line up with how the pass-through works if you have a small business. If you have rental property, Chris, you went to that seminar the other day. Explain how important it is that they kind of decouple their rental property.
Right. Yep. Rental property qualifies for this lovely 20% deduction on page 2 of your tax return. And I'm saying page 2, it may be page 5 now. Who knows with the schedules. But old tax return, we're going to say page 2. But it has to be your source of business. It's a business, and it has to be acted like a business. So if you're working and you have a job and you're making $80,000 a year and you have a double
One
and
rental.
yep, and you live in one half and you're renting out the other half, they're not going to let you take the 20% pass through on that half. It has to be something you're really actively trying to make money, that you have a separate bank account, everything. It has to be just like a business.
Right, or else you won't, so you'll miss the pass-through. Now, the thing is that's interesting is a lot of rental properties don't have a gain anyway because of
the depreciation.
Right.
So, it isn't something that is going to affect a lot of people, but if you have property that you've had for a number of years, it's pretty much paid for, fully depreciated, and this is your primary or very substantial source of income, you want to make sure that you start conducting it separately from your other income, or else you will lose that 20% pass-through,
Yep.
which is a lot of money. I have one of my clients that has like 40 rentals, and he has a very nice income from it, and his pass-through is going to be about $25,000.
Wow.
That's going to be his deduction. So that's a lot of money.
That's a lot of
You know,
money.
It saves him around $5,000.
And so
Now,
he
how
wants
much
to
of
make
that
sure he does
pass-through
it
is going to
right.
be deductible on the state?
Nothing.
That's exactly right. Exactly right.
Because they have divorced.
That's
for
right.
all
the two of them,
essential.
the state and the federal. Are
And
having
then
a
don't
big
forget
fight.
Christmas gifts. We mentioned this, but bears repeating Christmas gifts for people
Deductible
that are
Christmas
deductible. So don't forget to pay attention to that when you're shopping online.
Yeah, like for instance, if you might want to get your spouse who uses their phone or using a flip phone, and you say, gee, they're an outside salesman person, maybe they should you might want to get them a new iPhone. And, of course, that wouldn't be deductible on the federal, but it would be deductible on New York
Yep,
State. If
or-
you're self-employed, it would be deductible.
Yep. Or a piece of, if your wife was nice and bought you a nice piece of art for your office.
That's me. I did that for you.
That's right.
Yes.
That's right.
Yes.
And all those kind of things, if it's used in business, then even if it isn't deductible on the federal, it's deductible on the state. If you are self-employed, it'll be deductible both on the federal and New York State. So the important thing is, if you get anything out of today's lesson, boys and girls, is that
2 sets of books.
you really have to think about, here's the law on the federal. Oh, wait, but the law on the state is not what the federal is. And so for you to just say, well, I'm not gonna mess around with that, you can really be shooting yourself in the foot. And if you hear that there's a postcard-sized tax return this year, it is a postcard. But it has 6 pages of postcards. So it's just, you cannot believe, it's just bizarre what they did this year. But,
Don't judge a book by its cover.
There's a showman who's
exactly
running the
right.
show.
Again, if you need us during the week, if you want to come in and you want a end of tax year tax planning session, what do we charge for that?
Nothing, zip, nada.
Absolutely
Zilch.
nothing, right? And you can call us at 632-7886.
And don't forget, we are looking for receptionists right now. So if you want a great opportunity,
That's right.
have lots of
If
fun.
you like people,
Yeah.
and you like stress, because it is a stressful environment. You're doing,
go.
You're seeing a lot of people in a short period of time, and it's very important, and you like that, but you want to stay out of the winter, and you would like to do it. We have 30-some offices around Western New York, and we are looking for a lovely group of people to help us in that area. Or if you'd like to be on the phones and make appointments, we have phone appointments, people available, positions available. Just call us at the corporate office at 632-7886. Right?
Have a great week.
All right, and have a great week. Happy Thanksgiving.
Happy
We're so
birthday.
thankful. We are thankful for you, and we thank God for every minute. All right, have a good week. I'll talk to you later. Bye-bye.